Thanks to you both. Brad, first, just your reaction both to the quarter, then to Dara's comments. And I mean, what does it tell you about the underlying momentum of the core business? Why is the stock down so much?
Yeah, I mean, I think the stock's down in light of just kind of being in line generally from a top line perspective. The results were a little bit noisy, but like you said, as you remove some of the one-time stuff, it was in line. And at these valuations, which isn't rich, I think the knee-jerk reaction is to sell. Obviously, so the stock being down a little bit this morning is while not what we had hoped for, I think the better profitability, the improving unit economics kind of point to what Dara's talking about in the second half that really carries with it some acceleration and a nice narrative as we head into the back half of the year.
What exactly would you need to see over the next quarter or two to show you that things are getting in the right direction here? Because obviously, this is a very long-term proposition to invest in Uber in the first place. It's really a very big picture story. On a three-month increment, what's going to get better?
So there's kind of three main things, really. One is clearly the direction of the top line, both on the bookings and the revenue front. Because of some of the take rate mechanics going on in the model, the revenue growth is going to be significantly accelerating ahead of bookings growth in the second half. If bookings upsides, the stock is going to be a home run. Second, what we look for is the unit economics, right? It's things like how much they're having to incent drivers to be on the network, to be a part of the platform. That keeps coming down, which is part of what's helping take rate and drive the revenue acceleration. And then third, of course, is the expense controls. He mentioned that EBITDA the losses came in significantly less than what we were anticipating. I think that bodes very well for the future as these guys look to manage the business diligently relative to those loss-making expectations.
And Deirdre, Dara clearly was saying that the company is going to continue kind of fighting along all these different fronts with the various businesses, hoping down the road that there's a lot of synergy in that. Obviously, that seems to be a pretty consistent message since the IPO.
Right. I think that the message is consistent, and I hear what Dara is saying, but I think there was a stark contrast between what Lyft's team said and what Uber's team said last night. Lyft didn't just tell us, they showed us. They revised their guidance to show us that they're going to reach profitability. They have that path. What we heard from Dara Khosrowshahi was a lot of talk. Yesterday, he said that he thinks that 2019 is going to be a peak year of investment. When Faber sort of asked him and followed up on that, what did he say? He said, spending will decline as a percentage of revenue. That, to me, feels very vague, and it feels very different than what we heard from the Lyft team. And, when we talk about stripping out those one-time expenses, sure, it looks a little better, but when you dig deeper and you look at the fact that ride-sharing revenue only increased 2% and they're hurting in Latin America, I don't think it looks so great.
Yeah, I wonder, Brad, when an investor's faced with the choice, if they want exposure to this, why not just go with Lyft? It seems to be a much purer story, easier story to understand, domestic. Yeah. And to Deirdre's point, they seem to sort of be a lot more confident.
Yeah, and for the record, I don't cover Lyft, so can't have necessarily a qualified opinion on that. But yes, no, I hear you. With Uber, you're getting a massively more geographically diverse narrative and story. They're in several other businesses like freight and food delivery. That may be why Lyft is trading at a premium to Uber this morning. One thing I would note, though, just relative to the growth, just to put it in perspective, because I think there is a fairly good gap between the growth of Lyft and the growth of Uber. I'd kind of point out that Uber is going to grow gross bookings by for the rides business this year by a function of about 1.4x of what Lyft will. So there's still plenty of growth here coming from Uber as well.
I was just reviewing the conference call, Deirdre, and it looks like Mark Mahaney of RBC got into this issue of regulation and crackdowns on two key markets, New York and California. What do you think about what Dara said about those two issues, and how big of a deal is it for their model and for their business?
Sarah, I'm really glad you brought this up, because I do think that it flew under the radar last night. It has been flying under the radar for a while now, and that is the question of their drivers. Are they going to be freelance contractors forever, or is it possible that they could become employees? So the bill that Mahaney referenced in California, AB5, that could have huge ramifications. It's called the gig economy bill, and it could make it difficult for Uber and Lyft to classify their drivers as freelance contractors. And on the call last night, Dara said that he believes this could be a win-win situation, that he wants to keep them as contractors, but they might be willing to give a little bit in terms of perhaps minimum wage or other benefits. And that, Sarah, would represent an enormous cost to the company that I'm not sure is baked in right now.
And Brad, we need to run, but how big an issue or an overhang is this issue for the company?
So we don't view it as that big of an issue. Clearly, it's very important for the future of the gig economy, and we think they have the team in place, particularly their chief legal officer, who is terrific at dealing with these organizations and municipalities. So it's something they have to work out over time, absolutely. But over time, I think given the flexibility that Uber offers its employees, it's a completely different situation than what a W-2 employee would typically find at a job in terms of flexibility and the ability to be terminated. That is something that is a clear difference that will remain. So.